Indeed, throughout the world, there's a growing realization that the way to prosperity for all nations is rejecting protectionist legislation and promoting fair and free competition. Now, there are sound historical reasons for this. For those of us who lived through the Great Depression, the memory of the suffering it caused is deep and searing. And today, many economic analysts and historians argue that high tariff legislation passed back in that period, called the Smoot-Hawley Tariff, greatly deepened the Depression and prevented economic recovery. You see, at first, when someone says, let's impose tariffs on foreign imports, it looks like they're doing the patriotic thing by protecting American products and jobs. And sometimes for a short while it works, but only for a short time. What eventually occurs is, first, homegrown industries start relying on government protection in the form of high tariffs. They stop competing and stop making the innovative management and technological changes they need to succeed in world markets. And then, while all this is going on, something even worse occurs. High tariffs inevitably lead to retaliation by foreign countries and the triggering of fierce trade wars. The result is more and more tariffs, higher and higher trade barriers, and less competition. So soon, because of the prices made artificially high by tariffs that subsidize inefficiency and poor management, people stop buying. Then the worst happens. Markets shrink and collapse, businesses and industries shut down, and millions of people lose their jobs. The memory of all this occurring back in the 30s made me determined when I came to Washington to spare the American people the protectionist legislation that destroys prosperity. Now, it hasn't always been easy. There are those in the Congress, just as there were back in the 30s, who want to go for the quick political advantage, who risk America's prosperity for the sake of a short-term appeal to some special interest group, who forget that more than 5 million American jobs are directly tied to the foreign export business, and additional millions are tied to imports.
Hello, this is Paul Johnson with the New Frontiers. Now, today our panel is going to talk about the economy, as well as the budget, tariffs, and a variety of other topics that relate to it. But I also want to try to talk and focus on the underpinnings of what it is that's driving some of these new policies. I just wrote a book about it. The book is called What's Right with America, How to Keep It That Way. In that book, we talk about how pessimism tends to be driving our political system today. Oftentimes, to get elected, candidates have to tell people how terrible it is and how our industry has been hollowed out and how the economy has been devastated and people are out of work. They paint a picture oftentimes that focuses on hopelessness. What our book does is it tells you that that's just simply not true, that the data tells us that our economy has been one of the best growth economies and done more to improve the overall standard of living for more people than any other economy in our past history. The data matters, and that's what our book is about. It's important to us because we think policymakers oftentimes are making decisions based upon a bad set of underlying opinions, facts, and theories that just don't prove out to be true. Now, on the other hand, I'm just kind of an ordinary, optimistic American who still believes that the United States is a great cause for good. If you like, go to Amazon. You can pre-order that book now. But more importantly, push that button, become a subscriber, and let's get this show going.
Destiny. Destiny. You and I have a rendezvous with destiny. 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 You and I have a rendezvous with destiny.
We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard.
All right. So I'm going to start with the question to the panel, which is, are these ideas that Reagan are talking about, are they old-fashioned? Were they wrong? Do you disagree with them? Or maybe agree with the concepts? And we'll parse it apart so that we talk about the different elements. Now, first, I'm going to talk about Henry. Henry, our professor from ASU, is not here today. I'm not certain if after they got done going after the Palestinians in Colombia, if they decided to go after the New Zealanders, who are now conservatives and at ASU, but nonetheless, he couldn't make it today. So, Bob, if you would, give me kind of your thoughts about those ideas politically and whether they hold any relevance today.
I think in terms of substance as to how you grow an economy and expand opportunity for the broadest range of workers, it's as valid now as it was when Reagan enunciated those principles back during his presidency. And they still prevail in much of the world. While the United States sort of sidelined ourselves from free trade agreements seeking to lower trade barriers, many parts of the rest of the democratic capitalist countries actively engaged in additional agreements. So there remains a fairly robust, mostly free trade zone among democratic capitalist countries. It is certainly outdated in terms of the prevailing policy of the United States. Donald Trump believes in a protective tariff. It's not clear whether he understands what's required in order for that contrary economic philosophy to have a chance to work. You can't simultaneously say you want to protect domestic industries and through a tariff and say that the tariff is leverage for other policy concessions from other governments, some having to do with trade and with respect to fentanyl and illegal immigration having nothing to do with trade. Those are mutually contradictory policy objectives. But certainly the era of the United States being the free trade leader of the world is over.
Well, it's going to be a real interesting show. Define free and fair. Define trade barriers, define unfair practices, define free trade and economic growth. The U.S., since the end of World War II, has been subsidizing the rest of the world, and I mean virtually every country in the rest of the world, by having tariffs on American goods that are far higher than the tariffs on goods that come here, like 50% more in most cases. And that worked well at the end of World War II. We were the only viable market left in the world. We had to do that to get the rest of the world back on its feet. Probably made sense in the 50s, might have made sense in the 60s. Beyond that, it made no sense for us to be subsidizing the rest of the world. So, and I think that's the question. The question is reciprocal tariffs or no tariffs. And I know that some countries won't get back on their feet unless we subsidize them. Is that our job as a country? Not anymore. Not anymore. I believe that what Trump is shooting for, and if I'm wrong on this, he's going to be a lame duck after 3 months. If I'm right on this, he'll be considered an economic genius. One of the two. There's nothing in between, quite frankly. He needs to put U.S. companies on a more equal footing with our competitors. China charges something like 74% on our goods. We charge 37% on their goods. And the bottom line is we are subsidizing their military buildup and their Belt and Road Initiative around the world. It doesn't make a great deal of sense to me. It doesn't make a great deal of sense in a lot of cases. And so I think his definition of free and fair is different than a lot of people's definition of free and fair. He thinks free and fair is what's good for the goose is good for the gander. I personally, at this point in American history, have no problem with that. And I think where he's going, and I'll tell you why in a minute, is to get to a point where you either have tariffs that are non-existent or that are what's good for the goose is good for the gander. We'll see about that. If indeed Bob is right, and God forbid that ever happens, but it happens once in a while, that this is simply his misreading of the world. He's going to be it's going to be a short presidency in terms of before he's a lame duck. If he's right, he will essentially be saving the American economy. And what do I mean by that? Well, if you take a look at debt as a percent of GDP by sector, since the 2008 financial crisis, consumers at that point had about 125% of debt relative to the size of their sector of GDP. It's now down to less than 70%. The financial sector came down from really about same thing, over 120%, down to about 70%. Households really did well, and the only sector that isn't doing well is federal government, where debt as a percent of GDP in 2008 was basically about 40% of GDP. It's now 110% of GDP. What happened? Well, COVID happened. What happened is the baseline should be 2019 or very early 2020, because that is before the government decided to close down the world and had to put gobs of money out to keep the economy going. Otherwise, we would have sunk into a depression that would have lasted God knows how long. Fortunately, they did that. Unfortunately, at the end of COVID, what happened was Biden, and I'll just say that bluntly, and this is before he was senile. God forbid knows what would have happened if he was senile if when he did this. He gave $2.1 trillion, he poured into the economy after the economy had recovered. And if you want to know where inflation comes from, that's where it came from. The only question is, why didn't it show up sooner? And that had to do with the $2.1 trillion that he poured into the economy. And that's what caused the spike in debt as a percent of GDP. A sane person, and I'm not saying either one of them is sane, but a sane person would have gone back to that 2019 baseline and said, we're going to have to reduce things so that we are on an even keel again. That never happened. Trump comes into office and there's a clamor to reduce the national debt and the deficit. The only way he can do that, given the high level of government spending, is to reduce government spending. Well, I got news for you. A dollar that you cut out of government spending ain't much different than a dollar you cut out of private sector spending. So that means that Trump has to do several things that will hurt the economy. He has to reduce government spending to reduce the deficit. He has to reduce government spending because there's going to be fewer immigrants, and they basically are out there spending money, and there's fewer of them, so they're going to spend less money. He has to do these things that will hurt the economy before he can help the economy. And what I mean by that is he's looking around saying, are these tariffs fair? Under the circumstances, it's whether let's put it this way. He's in a situation where, given the hand he was dealt, at least for the second term, that he either finds a revenue source or he basically has to pay the piper later on when the economy goes in the tank because you had to reduce government spending. And that's the situation I think he finds himself in. And the obvious answer is, you know what? We're done subsidizing the world.
All right, so let me ask you a question before I move on to try to pull this apart. If I understand, Elliot, what you're really saying, and you can correct me if I'm wrong, doesn't sound like you're supporting tariffs. Sounds to me like you're still back on this argument of what's Trump's intention. Is Trump's intention to truly go out and impose tariffs on the rest of the world, that he believes in a economy that's based upon tariffs, or is he simply doing this to get other people to give their tariffs up? And if he's doing it to give these tariffs up, you think he's going to be a success. And if you think that he's doing this because he really believes in tariffs, then you think he'll end up being an economic disaster. Am I reading that right in terms of what I heard from you?
Yes, that I do not believe, or at least I hope, because if he does believe that you need high tariffs, regardless of what anybody else is doing, That is a huge mistake. Not a little mistake, a huge mistake. On the other hand, I believe in the pari passu concept. I believe in no tariffs. And I think that would get him a great deal of traction, because guess what would happen to inflation if you did away with tariffs? You know what? Inflation would go away. And it would allow him to do something else that he claims he wants to do, and that is reduce the income tax to zero on anybody who makes $150,000 or less. It fits into what it's the only logical conclusion I can draw from everything I've read about him, and it seems to be working. There are just a bunch of countries who are now trying to strike a deal with us. And if that deal is what's good for the goose is good for the gander, or that deal is how about no tariffs at all, we're a huge winner. The only way he can lose is by keeping American tariffs way higher than anybody else. I just think this is a negotiation ploy, because any other answer is too scary for me.
All right. So let's try to pull that apart. And I'm going to start with these in a series of different questions. Like, we're going to talk about, are these actually reciprocal tariffs? What does the formula do? I'd like to talk about a series of things, but I want to start with the rollout, because I do think that there are a number of inconsistencies that the Trump administration has left us with this debate. What is he really trying to do? And by the way, I think this is one of the worst rollouts of any program I've ever seen in my entire life in terms of how government is rolling out a program.
I can't disagree. I can't disagree.
Terrible in a variety of ways. One of them is there's inconsistency amongst his advisors in terms of what they're trying to do. You sent us both the interview with Bassett as well as Lutkin. And they were so dramatically different in terms of what they were saying they were trying to do that it makes you wonder if they're working for the same guy. I think Bassett was talking more along the lines of what you were talking about. I think Lutnick was talking more about why tariffs are the greatest thing ever. Those inconsistencies, I think, leave the world trying to figure out what it is that's really taking place here.
It completely undermined any claim of the Trump administration to be doing anything logical, consequential, or even understandable. And it gets into the question of what is a reciprocal tariff. These tariffs have no relationship to any principle of reciprocity at all. They are a arithmetic function of our trade deficit with various countries as a ratio to their exports to us. And the European Union, I think, is the best example. And the inability for there to be any understanding by anybody of any coherent purpose, argument, or policy that's in place. We do not have a trade agreement with the European Union. Our trade with the European Union, which has robust on both sides, we export a lot of them, we import a lot from them. But it's governed by the World Trade Organization's principles and most favored nation status for us vis-a-vis the European Union and the European Union vis-a-vis us. We have reciprocal tariffs, except for certain goods, and we're as guilty as the European Union of departing from that with respect to specific goods, as you can have. The European Union has offered Trump zero tariffs. So you bring down the World Trade Organization's most favored nation tariff levels to zero. He turned it down. The Vietnamese government has offered mutual zero tariffs. I don't know. I mean, the Trump policy is contradictory, but the notion that these highest tariffs in U.S. history and 3 or 4 times higher than anybody else in the world, even if you accept Elliott's view of what the Chinese are charging us, Trump is now over 70% with respect to the Chinese. He's threatened them to go over 100% on all of their products. um, there is there are fundamental contradictions in what the Trump administration says that it's seeking to accomplish. And I think at this point it requires a fairly Pollyannish view to say that all Trump wants to do is to gain leverage on other countries. There's nothing about this rollout or these specific proposals that suggests that he has a clue as to what he wants to do or what he wants to accomplish. And I have thought for some time now that he has become a committed protectionist, and he himself has said that he is a committed protectionist, that he wants to return to the US policy pre World War II, where we were largely a believer in a protectionist tariff. We only became free traders after World War II.
Elliot, Bob talked about in what he was just saying that on the retaliatory tariffs, that the formula that they've selected is one, again, that takes the total amount of trade imbalance that exists with the country, and then you just simply divide that by the amount of products that they're exporting into the U.S. There's no taking into account in that formula what are the tariffs they're actually charging. So there's no way of looking at what he's doing and saying, okay, this is really retaliatory because the tariff in their country is X, and so we're going to charge Y. Now, some of the excuses for that is Trump has said that there are things that go beyond tariffs that we ought to be focused on, currency manipulation and a wide variety of other things. But yet, I don't see any way that they're identifying for us what those issues are. Do you have a different sense that they're actually doing a better job of analyzing what it is that these countries are charging us?
I do not. I basically think I would agree with both of you. This rollout is crazy. Okay, it makes no sense to me whatsoever. I do not believe, however, he wants to be a 3-month president. And if a month from now we're still screwing around with this, and the stock market is still headed south, I think he's a lame duck at that point. And so when I examine the data, the only thing and by the way, the only thing that Bob said that I disagree with is tariffs. This is the last time tariffs were this high was 1909. But that's neither here nor there. The bottom line is that nothing else makes sense. I don't think this man is suicidal in terms of his presidency. I think he has something in mind. If I'm wrong on that, and you guys are right, he's going to be a lame duck in a month.
I'll tell you a little story about kind of my involvement with this in the past, and then ask you guys a question about whether or not you agree on this. So, the way that Trump is looking at tariffs is that we have a manufacturing base that's been hurt, that's done significant damage to a variety of groups that work inside industry throughout the United States, and these tariffs will be helpful. Interestingly enough, back in the 1990s, it's kind of a long story, but as it turns out, I ended up going to China, and a Chinese mayor there wanted to sign a trade agreement with me that would allow us, Tommy Gun and Motorola, to be able to sell phones there in exchange for them being able to sell goods here. Now, I signed this agreement, which caused me a lot of problems because there, the federal government appoints the mayor, which I didn't quite understand when I was signing this agreement. So it actually is a binding agreement. So they thought they had a binding agreement with the mayor inside the United States. And I ended up getting called up into the Clinton administration and kind of chewed out for what I had done. But as it turns out, I became a friend with a guy who was the labor secretary, or excuse me, trade secretary, named Mickey Cantor. And Mickey allowed me to go to Geneva for a short period of time to work on the GATT agreement. And in the GATT agreement, we were focused on this whole idea of international trade. Now, here was the interesting concept that we were dealing with back then. The theory was that no one around the world was supportive, or there was no enforcement mechanism for dealing with IP protections, intellectual property protections. And instead, what protections, or excuse me, Instead, what we were dealing with was more of a protectionist mentality in the United States, trying to keep many of their countries out of focusing on manufacturing goods that would be sold to the U.S. In any event, the goal that Mickey kind of laid out was that we had the best ideas in the world, but they weren't being protected in movies back then, movies and music and a variety of other things. But the internet was also something that was kind of new at the time, and the theory was that there were going to be a lot of new ideas that came out of that. And of course, there was. We created the WTO in that as part of that organization, or they did, because my involvement was again fairly short, but nonetheless, they created the WTO. And the idea was that was to be utilized as a mechanism to try to enforce intellectual property rights. Now, it's not perfect, and certainly the Chinese cheat. And by the way, I think if we were focused on the Chinese, it might actually make a lot of sense. But but doing it in the way that we're doing it, what really worries me is that the rest of the world, they're not beyond saying, why should we honor your intellectual property rights? Why shouldn't we just simply go recreate an Excel software or Word software or recreate Salesforce or whatever we want to, not honor the patents that have been put into place? Don't worry about the WTO, and we'll sell it for $8 instead of the price that it's being sold for today. It's not all that hard for them to duplicate it. But the real point that I'm making here is we created millions of jobs in SaaS, in software, in technology, in music, in movies. We created millions of jobs, millions and millions of jobs. And while we've been losing some on manufacturing, we were going to lose some in manufacturing anyway to technology. I'm worried that blowing up this agreement puts the United States in a much less competitive position.
What I have, the reading I've done indicates to me that there's a lot of loose ends, and that, but your reading of it and Bob's reading of it suggests that this man wants a very quick failed presidency. I just don't believe that. I think he's trying to resolve an issue that he's going to be stuck with, and that is how to get the deficit under control. And by the way, these tariffs would raise $3.1 trillion over the next 10 years, so it would help, but that's neither here nor there. The bottom line is there are too many unknowns. I can't give you an answer. There are too many unknowns. You're basically in the world of theory here. You know that if what he does or what he stated he's going to do happens, it's going to increase inflation by 1.5%, and reduce real GDP growth by about the same amount. That does him no good. It'll probably, one of the things you wanted to talk about was stagflation. It'll probably bring that back. It's maybe I'm too much of an optimist. It's just too far-fetched for me.
Yeah, and by the way, I don't know. You say that when you said that I'm promoting the fact that what he's trying to do is to support trade tariffs. Man, I hope you're right. I hope you're right that all he's trying to do is to see if he could get the rest of the world in this direction. But the rollout has left us with the question of what is it exactly that he's trying to do? And I think that's why the stock market's reacting the way that they are, because many of them are saying, no, he sees this as an end, not as a means. And again, but am I sure of that? No, in fact, I think we could all get rich if we actually knew what the real answer was by that. It might be by shorting the market, but nonetheless, knowing that answer is a big question. But I do think that it's worthwhile talking about it from a standpoint of, well, let's assume that what he's saying is what he's actually doing, because by talking about that, I think you begin to make changes. I think if lots of people talking from lots of different points of view begin to talk about this idea, if nothing else, we get an education. As a matter of fact, I'm going to say that there are some good things that are going to come out of this. Here's one that I'm going to say that's going to be good. Damn, it's like Democrats are becoming free traders. I can't even hardly believe it. I've been shocked as I've been listening to Democrats around the country talking about this issue, thinking, where were you guys when I was back in office? Because you couldn't hardly find them at the time. the people are beginning to think about the real consequences of it. And you said it's too scary to think about the opposite. I think there are a lot of people terrified right now because they're worried that the opposite is true.
Well, Trump has made both claims. He has said that it is intended to be a protective tariff that will increase domestic manufacturing, and that it's intended as leverage to try to achieve fairer trade terms between the United States and other countries. And now he's saying some of what he has proposed may be permanent, some of it may be temporary. So the confusion is purposeful. He has stated both positions, even though they are mutually contradictory. You cannot induce investment in a capital-intensive industry like manufacturing if the protective tariff may come and go up and down, and you can't count on it in terms of making a investment commitment. With respect to the WTO, the United States has largely emasculated its enforcement capabilities by refusing the appointment of the judges whose job it is to adjudicate trade disputes. So we have walked away from that as a potential enforcement mechanism to international trade agreements, at least from GATT. Some of these trade agreements that I referenced, among other democratic capitalist countries, which we are not participating in, do have alternative enforcement mechanisms. There's an alternative enforcement mechanism with Trump's rewrite of our trade agreement with Mexico and Canada. So the question of how do you enforce an agreement on trade is a serious one. But we are ignoring the commitments that we've made to the trade, to the mechanisms that currently exist.
Yeah, I can tell you, for me, if this is made permanent, my biggest issue is I believe that the intellectual property rights that have been guaranteed are going to become violated all over the world. And by the way, I think it's going to do extreme damage. I think the technology guys are not, maybe they are paying attention now, but I don't think they were paying attention to the idea that they're being sacrificed for a hypothetical gain that we're going to gain back in manufacturing. If, in fact, those intellectual property rights go away, it is going to have a severe impact on technology long term. There is a good podcast, another one that was done by Jordan Peterson with a fellow from Canada who just did a great job of kind of outlining this issue. But there are other inconsistencies that I see as well. And Elliot, you keep talking about the amount of money that we gain long term, but isn't that in itself inconsistent? Meaning, if the tariffs are successful and the American businesses actually go out and make investments, and by making these investments, they begin to produce those products here, are we really going to have the money that we anticipated that we would have had, knowing that now Americans are producing it and we're not buying it offshore?
The answer is yeah. The numbers that the people who put together the model that came up with these numbers took into account dynamic
Okay.
effects. So the answer.
All right. All right. So let's jump, if we can, to the idea of what Reagan talked about. And I think everybody on this podcast is going to remember that period of time. But there was a great book during that period that was called The Reckoning. I don't know if any of you ever had read it, but it was about the American automobile industry. And at the time, the book starts off with this great scene where Richard Nixon is president, and this young staffer comes in to talk to him, and what he's pushing for is the concept of American automobile manufacturers are in trouble. And he says they're in trouble because as these Japanese car manufacturers start to become known to Americans, they're produced better, they're lasting longer, they're making it more miles, and they have better gas mileage. Now, The big three automobile manufacturers went to Nixon. Not only did they lobby against it, they got this guy fired so that he wouldn't be there any longer. Nonetheless, the oil shortage takes place. And when the oil shortage takes place, we go from a couple of percentage points of Japanese cars that are imported into the United States to somewhere over 35%. And it's never fallen below 25% since then. It's been a large number. Why? Because the cars we were making were bad cars. We just didn't have competition in the United States. And when the Japanese car got here, they saw a better automobile. Now, since that period, when that book was written, it was fairly dark about what had happened. But since that point had happened, and I would recommend an American automobile to anyone. I think the American automobile is one of the best cars that are being made today. Ford, Chevy, Tesla, those are, they're great cars that are coming out of the United States. But I think competition helped that. That was part of what Reagan was talking about in the beginning. I'd love to know whether or not you agree with that, whether or not competition in itself is actually one of the benefits of free trade.
Of course, absolutely. On the other hand, if you're burdened too much with higher costs because of tariffs, it becomes more difficult. There's a reason that Germans stopped sending, which vehicle they stopped selling, some Mercedes SUV or something like that, because they couldn't compete. I will agree with you that I think it was the 50s and 60s and 70s that the U.S. auto industry had its head in the sand. But yes, there is no area in which competition does not help things.
That's also, I agree with that entirely, and that's one of the benefits of free trade, is that it keeps your own domestic producers on their toes as well, and a protective tariff is intended to insulate them against that kind of competition. And I think that it's sometimes overlooked that if you limit, in addition to the inflationary effect of the imposition of the tariff, and that to the extent we're still buying imported goods, the cost of them go up, the lack of competition or the reduced competition also creates upward pressure on prices. So it also has an inflationary effect.
All right, so let's go back to what the president needs to do to be successful. And Elliot, I'm gonna again start with you on this. You talked about the need to be able to reduce the deficit. You didn't talk about the need to reduce regulations. You also spoke about the idea that this needs to be about a means, not an end in itself, that we're trying to get other foreign governments to be able to play fair. I tend to agree with that, but I'd like to kind of hear your input as to how you think the Trump administration was moving forward on those issues. When we listened to Secretary Bessent, he did a very good job, I thought, of describing how it was that we needed to get to a balanced budget, but that it needed to be done over time. I think he utilized the number of every percent of GDP equals $360 billion or something along that line. And so while he wants to get to 3% of our budget deficit would reflect 3% of GDP as opposed to 6 or 7% to where it is today, he thought that the time frame for that was somewhere between 2027 and 2028. But nonetheless, he understood and believed that we had a reason to try to reduce the overall size of the debt and the deficit. He also believed that we needed to reduce regulations because those regulations would open up the ability to for the economy to be able to do better. I think both of those things he's spot on. The issue with tariffs that seems counter to this is if it's being seen as an end as opposed to a means, it actually reduces the ability to get that growth, which is necessary. But I'm kind of interested in your thought of, well, what if you increased tariffs, which increase a drag on the economy because you're charging consumers more, but you cut taxes and you reduce spending to an equal amount? Where does that end up taking us in your mind?
That's a very good question. You're going to have to do if tariffs are passed as an ends in themselves, and therefore costs go up. You're going to have to do something to keep real incomes up, especially for the bottom 3 quintiles. And the only way to do that is to cut taxes even more. This, because of the amount of money it raises, allows you to do that and to cut taxes on the overwhelming percentage of the population. And that would have to be the quid pro quo. If you don't do that and real incomes go down, like I said, Trump's toast. By the way, regulation is absolutely, that needs to be changed. I told you I thought was about 1 in 5 that Musk would be successful. I still believe that, but it was disappointing for me to see Ramaswamy leave because his job was to deal with regulation. Now, I don't know what's going on with that.
Yeah, and again, I mean, God knows Trump wouldn't listen to any one of the three of us, but if I were giving advice anyway, it would be to Trump. The idea of cutting the budget is actually a winner for him. The idea of reducing regulation was a big winner for him. I personally think that Elon Musk, I think Bob's going to end up proving to be right because I think he's already leaving, and I think he's leaving because he's getting his hat handed to him on his stock price and his and what's happening in his automobile companies and other things. But I think there was some value to showing some of the real waste that was there to give more of a PR effort to the reason for why cutting needed to take place. I think Bob is right. Cutting the employees when they represent only 10% of the overall budget's not going to get you anywhere realistically. But moving us in the direction of trying to ensure that the Republicans in Congress have a more difficult time not addressing the issue of you have to cut this budget. It was an important role that he played. Do you agree or disagree? And then I'll ask Bob the same thing.
Of course, I agree. In fact, if anything, this shows that Democrats don't give a damn about the size of the deficit and the size of the budget as long as their guy's not in office. It's actually shameful. I'm shocked that they are essentially turning their back on the concept of dealing with a government that has been in business for almost 250 years and nobody's ever been minding the store. I'm dumbfounded.
Yeah, and it is amazing to me that we end up having to be, from my standpoint, in a choice between one group of people who just seem to be willing to do nothing to cut the budget, nothing to reduce regulations, and another one who's willing to add a bunch of regulations on top called tariffs.
We are facing a significant tax increase if the Trump tax cuts from his first administration aren't renewed this year by Congress. And the corporate income tax rate, for example, would go to basically the same average as most developed democratic capitalist countries have of 21%, revert back to 35%, which is among the highest in the industrialized world. So it is a mystery to me why, even if Trump believes in a protective tariff and intended to go that route, he didn't start by ensuring that we avoided a substantial tax increase. And the additional cutting of taxes, which he has advocated and Republicans are talking about doing, has virtually no economic stimulative effect. They're not supply side. It's eliminating taxes on Social Security benefits for people who already make a pretty healthy amount of money outside of their Social Security benefits, tips and overtime wages. So there isn't any discussion of a supply side tax cut occurring within the Republican Party. And there is reason to worry that they will not successfully avoid a substantial tax increase. And worrying about the deficit only when you're the opposition party is a bipartisan sin in our system. Republicans were equally as indifferent to it. And neither Trump nor anyone, nor the budget resolutions that Congress is considering, do much of anything to reduce the federal deficit. That's the real action, what they propose to spend, not the sideshow of the havoc that Elon Musk is generating within the structure of the federal government. And there's no serious proposal from Trump, no serious proposal from congressional Republicans to do anything meaningful about the federal deficit. And there's ample reason to believe that Trump doesn't regard that as important or a political objective of his. He's never been an anti-deficit guy.
The only thing I will say that I disagree with that on, Bob, is I believe that the political pressure to reduce the budget is actually greater today than it's been in a long time. Now, I don't know if that's because Republicans control the House, the Senate, and the presidency. I don't know if it's because of Doge. I don't know if it's because of Ray Dalio's book. I know Ray met with congressional leaders as well as with the president. But I do think I hear from an awful lot of Americans who are not engaged in the process an understanding of the need to reduce the overall size of the budget. Do you disagree with that? I mean, I've heard other people who talked about what it's like in the halls of Congress today, some Congress people who say it's just really not a priority for them. But my read is that there's a political pressure for them to do something. And I think the conservative caucus has actually gotten to the point where they're going to withhold votes if they're not willing to do it. Your thoughts on that?
I would agree that there is, outside of the political bubble inhabited by the president and elected members of Congress, a growing concern about the threat to our economic future posed by an unsustainable level of debt and a lack of seriousness about doing anything about it. I am not seeing that manifest itself in anything other than performative, even among the conservative caucus in the House. What they are saying is that they want the budget resolution to include a minimum of 1.5 trillion in cuts over 10 years and an outside aspiration of a cut of 2 trillion over 10 years. So that's $150 billion a year minimum and $200 billion a year aspirational, when we've got a chronic annual budget deficit of 1.8 trillion. There simply is not any serious discussion within Congress. There is outside of Congress. There's no serious discussion within Congress of doing something that would meaningfully change the trajectory of our debt and reduce it to the point that's regarded as sustainable. And I accept your view that 3% of GDP is a reasonable target for that.
All right. So let me ask you another political question, what your thoughts are on this. Do you think there's any chance that on the tariffs that Congress grows a spine? We saw a piece of legislation last week that passed that had 4 Senate Republicans. We're hearing from more Senate Republicans about this whole concept of one person being able to drive tariffs. Certainly, Congress, according to the Constitution, is the one that's supposed to be able to determine tariffs as opposed to the president. But do you think there's any chance that actually Congress steps up, which is going to take Republicans who are willing to defy him on this?
If we continue towards an economic meltdown and a recession appears to loom, you might begin to see a greater willingness to take on the president with respect to tariffs. You have 7 U.S. senators who have signed on to a bill that would say that the president has to provide advance notice of the intent to impose tariffs, and they have to be removed if Congress doesn't approve them within 60 days. Those 7 members don't include Rand Paul, who just gave a scorching floor speech about what Trump is doing on tariffs. So you do have, let's call it a gain a spine caucus, at least in the Senate. You don't have a willingness by the leadership to bring such a bill to a vote, and Trump has vowed to veto them. You also, however, have a legal challenge occurring to these tariffs. They are claimed to be authorized by a International Emergency Economic Powers Act. And that act does not specifically authorize tariffs. It discusses sanctions. It discusses seizing assets. It discusses not permitting certain commercial transactions. But there's nothing in this particular act that specifically authorized tariffs. And so there is a legal challenge being mounted saying that these particular tariffs issued under that authority aren't authorized by Congress. Where Congress has explicitly authorized the president to exercise tariff authority, there are certain processes that are dictated. There has to be an investigation. There has to be findings. There has to be the ability of people to offer input before a decision is made. So I do believe that you've got some congressional unrest, and you have a legal challenge being mounted. I don't have optimism about how quickly either will result in remedial action, but certainly there is a resistance that's maybe stronger than one would expect at this point, and growing.
Yeah, and I think that that's going to continue to grow because, first, I'm hearing from lots of business leaders who were Trump supporters complete dismay about where we are on this issue. Certainly, the group that's formed that is doing the litigation, and I've listened to a variety of different talks on this subject, and it seems to me like they have a good case. It's not a perfect case, but it's a good case to be able to overthrow him on whether or not he had the authority to do what he wanted to do. But I think what you're right on both of those items is how quickly that can happen. And so, Elliot, I'm going to go back to you on this. Um, help me think about the effects of this on the economy. So, when you look back to when stagflation happened last time, is that a real possibility? Is a recession a greater possibility? And what I'd like you to do is to strongman this from a point of view that you don't necessarily agree with. The point of view that you have is that this is being done as a means to an end as opposed to an end itself. But let's assume just for a moment that that he actually intends to stay with it. The question then for me becomes, well, how much time does it really take for a recession to begin to form? How much time does it take before stagflation could become a possibility? And help us understand what stagflation really is.
The answer is almost immediate. There will not be very much of a lag at all. In fact, I believe it's the Fed of Atlanta's model says that there was going to be a recession in the first quarter. I shouldn't say it won't be a recession. It'll be a modest decline in GDP. And that is likely to happen. Stagflation is a period of slow growth and higher than average inflation. It hasn't happened here since really the last real case of it was Jimmy Carter, and it ultimately cost him the election, I believe. And Reagan came in and cleaned it up by doing something that in today's world would be unthinkable. He basically sat down with Paul Volcker, and they came up with a plan to squeeze inflation out of the economy because it was getting out of control. It actually got up to, boy, get the exact number, but it was well above 12% in 1982. And
Elliot, I want to interrupt you because I
yeah,
lived through the 1980s literally in a pickup truck. I was 18 years old. The economy had fallen out from underneath us. I had to pay my own way through college. I had to leave school. I had a family, and I was driving around looking for work, and I just knew how bad it was. In fact, I ended up becoming a supporter of Ronald Reagan in his first election, in my
yeah,
first election, because my view was the economy was so bad, and I just blamed that on Jimmy Carter. I'm not saying that was fair. I was 18 or 19 years old. I had a pretty simple view. I'm not working. My family needs something. We've been
yeah.
hurt. But is it really possible that you can have a 12% or a 10% unemployment, that you can have a recession that's taken place and assets are still inflating, and that goods are still inflating? How does that happen?
It's very odd. I'm not sure that anybody's ever been able to really explain it. It. By the way, what you're describing, it was really the 70s. Carter was 76 through 80. Okay, and it was during that administration where things slowed to a crawl and inflation was higher than normal. It really, I'm not sure it's ever happened before or if it's ever happened since. But the only way that Reagan, and I got to give credit to Carter because he's the one who started that ball rolling with Volcker, was to squeeze it out of the economy through higher and higher interest rates until inflation started to come down. And basically, the interest rates reached a peak in 1982 and basically didn't bottom out until 2022, a 30-year period of declining interest rates, and which, again, unprecedented in American history. Um, uh, the bottom line is that if you have these tariffs, prices will go up. Again, most surveys I'm seeing are somewhere between 0.9% and 1.5% in terms of higher inflation. But there'll also be a slowdown in the economy of 1% to 2%. So you'll have a slower rate of growth and higher inflation for several years. In fact, some of the surveys say that there's a permanent decline in economic activity worldwide of about 0.5% ad infinitum. And that is not a healthy situation. And most likely, the chances of a Reagan and a Volcker having the guts to do what they did in today's world strikes me as slim. So this could last a long time if it was to happen. There is nothing good. And let me make a point that if you're right and I'm wrong, there is nothing good that's going to come out of this.
Yeah, I'm actually praying that you're right, but I'm worried that Bob is in any event. So, but let me ask one more question, if I can, on this topic. So, from your own asset standpoint, what do you do if that ends up taking place? Where do you put your money? Do you still keep putting it into real estate, into stocks, into bonds? Uh,
Well, it depends on your time horizon. I'm 100,000 years old, so I probably am not going to put it in long-term assets. But first of all, we'll get to the stock market. The stock market is almost fairly valued now. Might have to go down a little more to be fairly valued. We'll talk about that. But in the long run, your best chance is with hard assets, real estate, much more so than gold, for example, except for certain, like right now, gold is doing much better than real estate. But in the long run, the demographics suggest that you're better off buying long-term assets like real estate, long-term assets like stocks, but not when they've been overvalued for probably a decade, or certainly half a decade, excuse me. And don't panic. That's my suggestion to people is If you haven't sold out of the stock market by now, don't. Just sit there, find a good index fund, find Berkshire Hathaway, and just put money in those things. Why Berkshire Hathaway? Because they've got $350 billion in cash that is sitting on, waiting for something bad to happen. And if you're right, something bad will happen. If I'm right, you'll still do just fine.
And
But the bottom line is not to panic. I think that ultimately, if you rolled over treasury bills or 6-month notes or a year note, you would have done fine through the 1980s. But if you owned hard assets, you did better.
yeah, it's we're looking at some of our assets right now. We're certainly our healthcare company that seems to be doing very well. We're still profitable, but on our real estate side, while it's profitable, we've been more focused on the home building side, and now we have subdivisions. I
Right.
think we're going to shift them over to leasing, just simply because we believe that holding onto the asset is going to be better for us long term if there's inflationary
Yes.
effects, and we can certainly cover
Yes.
the debt service with what we have. But the downside to that will be if you're not in real estate and you have stagflation, you're probably going to see your rents go up, and that's the opposite
Well,
side of the bet.
you're if right now, let's take a look at real estate. Uh, the cost of a home is continuing to rise for regulatory reasons, for the fact that if tariffs on lumber are going up, tariffs on steel are going up, and so there's a problem there. Um, it now takes 5 years of income to buy the average home. It used to take 3. So it's more than just interest rates. It has to do with the fact that for the last few decades, housing prices, actually since 2010 probably, uh, housing prices have gone up more than the rate of inflation. And so it's a difficult situation to buy, yet um, you're going to run into a shortage of housing. All the apartments that are coming on stream now were actually first permitted when interest rates were low, before 2023, and there's not much behind it. A lot of people can't afford homes; they're moving into apartments. That's going to put pressure on rents. And 2 years from now, 3 years from now, there's not going to be any deliveries of apartments because nobody's building them right now. Nothing pencils out. That's what I can't figure. To me, it suggests that housing prices in general have to continue to rise because nothing pencils out. So either interest rates have to come down, value of the asset has to come down, uh, or rents, and I don't see either of those things
All right,
happening.
so I'm going to ask you
So
one last question about the stock market, but before I do, we don't give investment advice on the show. I mean, the advice that we're giving is kind of to ourselves. It's not to anybody on the outside.
yes,
Um, what I will say is, the public can do what I did. I chat GPT'd. Okay, so if there's stagflation, where should I invest money? And it was fascinating what came up. Like at the top of the list, I don't remember if it was 3 or 4, it was defense. Because usually in a period of, by the way, I'd included in my question the issue of tariffs. I said usually in a period of protectionism, defense spending ends up having to go up. So thought that was interesting. But one of the other ones right at the top was investing in REITs or in real estate where they were focused on long-term rentals. That there would be problems for the home building industry,
right.
but there would be more success on the long-term rental side. And the opposing fact to that on home building was interest rates usually go down. So there's a lot of talk about what's happening with the 10-year rate. There's some dip that's happening. Good news for home buyers is it's kind of a better time to be able to buy a home with lower interest rates. But most of them are so afraid about what's going to happen to the economy, they're not making the choice right now. But if you said we'd
Right.
talk a little more about the stock market. Give me your read on why you think the stock market was overvalued and what do you think it is that's taking place with it?
Well, the United States of America is probably the only major economy in the world that has been this successful for so long. And it's been very successful really since the recovery after 2008. And I think that that changed people's perception of the rate of growth, and that caused them to, um, in my opinion, overvalue, and it's just my opinion, overvalue stocks. And so there's something called the Shiller PE ratio. It basically takes a look at PE ratios over time and adjusts them. And the peak was actually sometime around 2000, but it's been very high since. And the long-term average is probably around, I don't know, 30, 32, and it's down to about 36 now. So according to that, the stock market is still somewhat overvalued, but it's a lot less overvalued than it was. And I think if you're a believer in the long-term growth prospects of the United States of America, and while you basically are going to run into periods like this where things look like the end, it looks like the end of the world, it won't be. And the U.S. will continue to thrive in the long run, and that stocks make a good sense. But you can't time this stuff. You just got to pick, if you've got a lot of cash, and by the way, there's a huge amount of cash on the sidelines in consumer hands and in financial institution hands. A lot of that will end up in the stock and bond market over the next year.
I want to talk about now just for a moment the whole issue of how this is being framed. And when I say that, we're hearing a lot of talk from people inside the administration and their supporters that this shouldn't be about Wall Street, that it should be about Main Street. Now, that's not a new concept. During the period of time that I was pretty heavily involved in politics, I was engaged in helping a number of people run their presidential campaigns, as well as my own time of being mayor. That was what the progressive left utilized as their slogan. The idea that it should be about Main Street, not Wall Street. And there was this constant belief that people who were involved in the capital markets were corrupt, they were driven by profit, and that the benefits really weren't going to average Americans. We're hearing that now pretty much on the right, which is fascinating to me. It's a very similar concept. But I was on a cruise this last weekend, and I talked to a number of different people while I was there, and there were a number of older people. I talked to this older gentleman, which this cruise was a big deal for him. His family had gone on it. His grandkids were on it. By the way, it was a Disney cruise. So for those of you that I felt like I should have been drinking a lot more than I was, but nonetheless, it's not that type of cruise. There was this older guy who worked as a laborer most of his life for a construction company. He put in his time. He had a 401k and he has a Social Security. His first trip he'd taken in 25 years. And he didn't have money. Didn't have money to take trips. He doesn't have a second home. He doesn't have, he lives with a 10, 15-year-old vehicle. But he saved literally $1 million that he had put into his account over time with he and his wife working literally as a secretary. He had saved money and had built up in the stock market. But as I was talking to him, he told me he was a supporter of Donald Trump. And I didn't argue with him in any way, shape, or form. I just kind of wanted to hear and understand how he saw the world. And his view of it, I asked him about tariffs and what he thought was happening to the economy. And the thought that he gave me was, he said, well, he said, I'm not sure about his timing on this. I'm really worried about what he's doing. My wife and I have been worried. We've lost about 30% of our stock value inside our 401k. But, he's a businessman. And I just believe that as a businessman, he has a plan, that he has a plan that's going to try to fix this. Now, I didn't say anything to him, but my heart was breaking, right? Because I hope Elliot's right. I don't believe he has a plan. I believe he has an idea. That's very different than a plan. And I think that there are working stiffs like this guy who bet on him, who believe in him, who think that he's going to do the right thing for them, and they're hoping that this plan of his evolves in the right way. And God only knows I do too. I hope that it does. I was listening, Elliot sent us a couple of podcasts, and again, I thought I really liked Bassett. The more I listened to Treasury Secretary Bassett, I think he is a quality first-rate guy. The Trump administration is lucky to have him. I thought Lutnick was a goof. I mean, I know he's brilliant. I know he's made a lot of money. But one of the things that we should learn from Elon Musk and others is just because you're a genius at one thing doesn't make you a genius at everything. There are areas where people can be a genius and then they're not so smart, especially when it comes to politics on others. But I listened to a few of the other podcasts that All In had done. By the way, outstanding podcast. I like all of the members on it. One of my favorite guys on this program is a guy named Chamath. Now, I looked him up. He's become very successful. He was an immigrant from Sri Lanka, came to the United States with nothing, went to work, I believe it was with Facebook. I might have that wrong, but nonetheless, he made a lot of money. He reminds me of many of the liberals that I used to know as distinguished from progressives. Right? The progressives were the ones that were kind of the Bernie bros that were all talking about how it is that we should be implementing more of a socialist type of economy. The liberals were people who wanted the maximum amount of amount of liberties for people, but they wanted a safety net. They wanted a good, strong safety net. And I would say the liberals were more like the Bill Clintons in life. In any event, Chamath is on the Republican side, but he reminds me of the liberal because there's this dichotomy with him as you're listening to him between remembering his past and remembering what it was like to not have money, and also a little bit of guilt that's associated with the fact that he's made a lot of money, that he's become wealthy. My challenge with that is that I think he's been rich for so long that he just simply has forgotten that when it comes to Main Street and Wall Street, there's no difference. They're the same thing. This guy that I was talking about on the cruise, his 401k is involved in the stock market. I don't know how we frame that, but the idea that we've created this concept that somehow or another, if the guy sitting on the other end of us suffers, whether he's at the working end or at the upper economic end, if he suffers, we're going to suffer part of this consequence with him. And that to me is part of where tariffs are coming from. It's a pessimistic view of the world that believes that we can make it better so long as we make Wall Street suffer so that Main Street benefits. And that is part of what they're selling.
Well, the invective of Wall Street versus Main Street is intended to invoke the image of the fund managers making tons of money just trading paper. But the superior performance that Elliott cited is in significant part a result of the United States having one of the deepest and freest capital markets in the world and in the history of the world. And it is those capital markets that allow businesses to be formed, businesses to expand, businesses to employ millions of people. And I think this attempt to frame this in terms of resentment of a false caricature of what Wall Street means is beginning to dissipate on the left. You have a renewed appreciation for the need to expand the economic pie as characterized the new Democratic movement that ultimately yielded Clinton as president. You see it in the abundance discussion that's taking place on the left. There's still a belief in industrial policy that's unfortunate and not enough trust for the market to produce, but at least there is on the left a growing appreciation for the need to talk about the size of the pie, not just how you redistribute it. And it was interesting. Our own Arizona Senator Ruben Gallego, who won an election defying what ought to be the odds in a purple state like Arizona, was asked what he attributed his success to. And he said it was because I wanted to see people have more wealth. He flat said improving living conditions are the key to the political strategy that he employed. And in order to do that, you need very successful and deep capital markets, as we have. And that is what real Wall Street actually represents, not the fancy guys that are actually on Wall Street making tons of money by trading paper.
Elliot, I'm going to twist this just a little bit, but you can answer the same question if you would like. However, what I want to stress is I believe that I believe there is a movement on the left, just as Bob has said, this abundance movement. But I believe that that's a minority of Democrats. I wish it was a majority. I really do. But I believe it's a minority of Democrats. Um, I'm worried about the following. Uh, I really think that Trump, and again, I'm not a supporter. I didn't vote
Yeah.
for him. But I wanted him to be a success. When I look at it in society today, I think the reality is he's the guy that's representing capitalism. He's not. I mean, I don't see him in representing capitalism with the tariff issue. But the idea that he was talking about cutting the budget, reducing regulations, that he had all of those folks with Google and the other companies that were standing behind him. The technology has been there, as well as having some blue collar voters. There was a coalition of interest, but he represented capitalism, partly because that's who he is. He's a business guy who's made a lot of money in the capitalist market. I'm terrified. Here's what I'm terrified about. If he's a failure, I'm worried about the populist movement on the right and the left becoming stronger. That both of them actually begin to become more powerful. Now, my question to you is: you've looked a lot at economics. Is there any reality to the idea that if people at the top go down, that people at the bottom actually come up? Or do you just simply lower the margin between them so that it feels better, even though both may be doing worse?
The answer is there is no reason to believe that. Nothing I've ever seen or ever read suggests that that's the way it works. Indeed, the more free a society, the more the mobility in quintiles. In fact, 60% of the people in the top two quintiles came from the bottom three quintiles. Tremendous volatility in terms of people's ability to move up, create wealth, get educated, and get into the system. Whereas in countries that just tear down the top, nothing happens. It's all about movement from the bottom up based on, again, I hate to quote Trump, and I wish he lived his life like this, a society that's colorblind and merit-based. And those tend to be the best societies on virtually every level. And I've never seen a capitalist society or even a socialist society where the masses benefit from ripping down a few people at the top. It's nonsense. There's no evidence of that whatsoever. And what scares me is when I see AOC and Bernie drawing crowds. If Trump is a failure, that is going to end up being a real problem.
And so, Bob, I'm going to give you the last point on this, but this has been my hope, because I believe that both the right and the left are self-destructing to a point of becoming anti-capitalism, anti-free democracy. My belief is you have to find a way to engage people in the middle. Now, we tried the open primary. We weren't successful. Maybe there's another way that we can do it. But it seems to me that there's a large swath of voters that are left in the center that we have to find a way to engage them if we're going to try to find a way to make this work.
I would completely agree with that analysis. And I think an open primary is the structural answer to it. I think that there's enough sentiment in the Democratic Party that we lost to Trump for a reason, that there won't be necessarily broadly the reflexive retreat to the Bernie Sanders woke progressivism, which the voters partially rejected in 2024. There will be a very open primary for the Democratic nomination in 2028. And that is where the Democratic Party will sort of define itself. And I would agree with you that right now the abundance movement, or a revival of the new Democratic leadership movement of the 1990s, is very much in a minority position. But the moment for the Democratic Party to define itself will occur at that point in time. And I think it would be premature to try to pronounce how that will come out. I do believe that there is within Democrats at least a sense that if they lost to some guy like Trump, they were doing something wrong, and they need to be thinking about doing something different.
Yeah, they were doing something definitely wrong. And it's the divisions inside the Democratic Party. My feeling with Kamala was she was trying to appease both sides. So she talked about joy, and that just didn't cut it. I think that you need a Democrat who actually runs against the Democratic Party, but in a way in which that engages them, that makes them think about this from a broader term. They're terrified about what's happening in our country, but they can't win if they don't talk about how we grow, how it is that we can make the pie larger. They've constantly wanted to fight over a diminishing pie that they're partly trying to make a diminishing pie. If they talk about how you expand the pie, they're going to have a much better chance of not only being successful in electoral politics, but it actually is a more successful strategy once you win. Because if we're in a fight over a diminishing pie, it's just not going to be a good country to live in. In any event, gentlemen, thanks for both of your time on this today. I also appreciate you giving us the best input that you can. Thank you.
Thank you.
You bet.
Thanks, guys.
And we stand today on the edge of a new frontier, the frontier of unknown opportunities and perils. It holds out the promise of more sacrifice instead of more security. The new frontier is here.
You and I have a rendezvous with destiny. We'll preserve for our children this, the last best hope of man on earth, or we'll sentence them to take the last step into 1,000 years of darkness.